Hello guys, welcome back to my channel. Don't forget to like, share, comment, and subscribe. New York, the US economy will need tight monetary policy for some time before inflation, weaker job market, and some pain for healers and business. For the Lrc chair, Jerome Powell said on Friday in remarks warning their next quick core to fast rising price. Reducing inflation is likely to require a Senate period of below-trend growth. Moreover, there will likely be some softening of labor market conditions, while higher interest rates, slower growth, and sour labor market conditions will bring down inflation. They will also bring some pain to housing and business, Powell said in prepared remarks for a speech to the Jackson Hole Central Banking Conference in Wyoming. Chairman Powell spoke today at Jackson Hole where he maintained and reiterated the hawkish stance the U.S. Federal Reserve is taking toward the current high levels of inflation. In a short and echoed speech, he made several points. Firstly, that the economy was still showing strong underlying momentum and that the labor market in particular remains of a balance. Second, that interest rates will continue to rise to a respect stance in importantly stay there for some time, partly because the Fed views it will take time for initially forces to decline. But also because inversely it was a mistake to relax policy too early. In short, the speech was hawkish, special of government. They've continued to rise. Full, short but direct speech was focused and delivering message to the market to rate expansion for a longer period of monitoring tighter monetary policy conditions in order to successfully combat inflation. He provided a historical context and Jasper for the need to maintain levels on one current cycle peak is reached, and indeed the Fed's willing to do so even the face of recession and rising unemployment. So, he headline summary is that we are getting closer to the peak, but we will peel it out for an extended period prior to any potential forward. It was pretty much in line with what we're expecting, and that's even though they don't want to go forward guidance. They are going to try and guide markets to the idea that they are going to slow down the pace of the hiking cycle, but they're going to offset that with idea that rates are going to be restricted for longer. And that was what was the rate winning thing priced the currently to being weight. This was a pitch for his legacy because that fish has been tarnished for its stubborn transitory view of rising inflation. Without enough to the was naturally to punch inflation from the economy. By invoking the work of other freshman who had to deal with inflation pressure, Powell made it clear how the ones to be perceived as especially who restored price stability in order to restore a strong economic foundation. Given the backdrop of easing financial conditions since early July as week expected, we have seen a pushback by Chair Jerome Powell on the market. Some of the more silent and persistent component remain lifted. In addition, the labor market remains tight. The one sector which is showing said in color slowdown in activity is housing. In his speech, we have now respected the terminal rate to around approximately and think that many remain high for longer, which some restricted until clear sign of economic inflation slowdown appear. He certainly focused on the expansion and to talk a lot about rational expansion, which the Fed believe would what happens with making inflation permanent. He focused and not listening police too early, but he didn't mention going any further on house side. The Fed wants to talk because they don't want inflation to become ingrained in the economy. That was Powell's key point that inflation expansion are important. He were very relevant anything else. Maybe that's all from me. Thanks for watching. Don't forget to like, share, comment, and subscribe.